On the agenda today, we talk earnings with R. Chandrasekaran of Cognizant, Rajiv Balakrishnan of Bata India, aviation with former director of Jet Airways, Saroj Datta. But first, we're going to be talking about IT. An IT service provider, Cognizant, has delivered strong numbers. The Nasdaq-listed company's revenues were up 22% year-on-year. The company also raised its full-year sales forecast again. This is the second time this year. Priya standing by to tell us what's working for Cognizant. Priya.
Well, absolutely. Beating all street estimates, Cognizant has reported stellar numbers. Now, if you look on a sequential basis, it's grown by about 6.7%, which is much ahead of its Indian rivals. Now, if you look at the results of the other top IT companies, TCS grew by about 5.4%, Infosys grew by about 3.8%, and Wipro grew about 2.7%. So clearly, Cognizant has stolen the show. There are a lot of factors that are working for Cognizant. Now, the first and most important thing is focus on verticals. Cognizant is focusing on verticals which are very high revenue generators. Now, for instance, healthcare and financial services both have seen a double-digit growth on a quarter-on-quarter basis, and even huge growth on a year-on-year basis. The second most important thing is focus on geographies. Now, focus as far as North America is concerned has seen, it's in fact dominated growth across geographies. Even Europe has seen a stellar growth, and if you compare this with other IT companies are slowly seeing growth, increasing growth in Europe as a geography. The third most important factor is investments and acquisitions. Now, as far as acquisitions are concerned, Cognizant has been acquiring a lot of companies in Europe, which is a recent example of which was Equinox Consulting. So clearly they have built up their game, and they are operating on an agile model, which is helping them accelerate their growth in the coming quarters. In fact, interesting thing about the guidance is that the company has been able to up its guidance for the second time in a row, which is at least 20.3% in comparison to the at least 19% that they had mentioned last quarter. Although the management has been skeptical about the next quarter, which has a lot of furloughs, as the rest of the IT peers have mentioned, we need to wait and watch how this pans out for the industry at large.
Priya, thanks for that. Joining us now is R. Chandrasekaran, Group Chief Executive of Operations at Cognizant. Mr. Chandrasekaran, many thanks for joining us on Bloomberg. Let me begin by asking you about your assessment of demand right now. Do you anticipate clients to be spending more in 2014 and across verticals?
Let me answer that in a couple of dimensions. One is we feel pretty good with reference to demand for our services. It's more due to Cognizant phenomenon, because we have been investing a lot to remain relevant to our customers, and customers are faced with a dual mandate to really bring in efficiencies and really help run their business better. And so we are able to provide several services to our customers in terms of helping them run better and more efficiently. But at the same time, many of the customers in almost all the industry domains are faced with the challenge of doing a lot of business transformation, leveraging newer technologies, newer business models, and the investments that we have made in creating platforms, in leveraging SMAC technologies to drive business transformation, is really helping customers to run differently.
Sure.
So run better and run different. The
Sure.
dual mandate that the customers are facing today, we have been able to address that very effectively. So
Sure.
we see good demand for Cognizant services because of the investments that we have made and the focus that we have had in helping customers run better and run different.
Mr. Chandrasekaran, what is the trend emerging in Europe? The last time we spoke, you said that while Europe continues to be a long-term driver, it was too early to call if there was indeed a pickup in discretionary spending. Do you see that happening now?
We continue to maintain that Europe is a long-term bet. You cannot expect very quick short-term wins, and that is why we have a very focused approach of taking a longer-term view, and that's why we have been announcing one acquisition after the other. A few quarters ago we announced this C16 group of 6 companies in Germany. Last month we announced a financial services consulting firm called Equinox in France. So these are all part of our strategy to gradually expand our presence and create the local presence that we need to be successful in continental Europe. So we still view Europe as a long-term bet, but we are making one move after the other so that, we are able to tap the potential that's out there. And, we are seeing the results already, and if you look at our Q3 performance, Europe, including UK, grew almost over 7%.
Right.
And while UK grew by about 5.4% sequentially,
right.
The continental Europe actually grew well over 9%, and it's mainly because we have been able to create that local presence through these acquisitions and really have a joint go-to-market to win newer logos. It's really helping us grow very rapidly in Europe.
Sure. Mr. Chandrasekharan, what about pricing? Have you been able to price your services better this quarter? Has that yielded in higher margins for you?
What we have seen in the last couple of quarters, pricing has been very, very stable. And so we expect going forward also it will remain very stable.
Sure. How do you see the deal pipeline right now? Do you think in 2014 there would be more number of the large $100 million, $200 million plus deals out there in the marketplace? Is that something that you're actively hunting?
The deal pipeline, it's relative to the capabilities the organizations have. That's why I alluded to your earlier question. We feel pretty good about the deal pipeline because of the investment that we have made in terms of, developing newer capabilities and also improving the existing capabilities that we have in the organization so that we are able to be a lot more cost effective in the way we help our customers run their business. So given our services mix and given our ability to bring synergy between IT and BPS, applications and infrastructure, we have been able to provide very unique value proposition to our clients. And, today we are capable of taking on end-to-end ownership for a business area, for a customer, and really offer services on an outcome-based model. So that's the type of capability that we have built as an organization, which is really helping us get good traction and build a very healthy pipeline for our business.
One final question, sir, and this is with respect to the visa case involving Infosys. Do you anticipate, as a consequence of what's happened with Infosys, do you anticipate greater scrutiny for Indian companies? Do you think this sort of makes the case stronger for the United States to be tightening immigration laws?
I don't want to comment on the Infosys case. It's not appropriate for me to comment on that. But as an organization, we have been very careful in the way we comply with the visa norms. In fact, we also have separate, sort of a part of the organization looking at compliance. We have segregated compliance vis-a-vis the regular operations when it comes to, processing visa for our associates. So we really are extra careful in terms of complying with the rules and regulations and really, do our business with very high standards and ethics.
Good talking to you as always, sir. Many thanks for joining us with your views. That's the view from Cognizant. Numbers have been quite good. They've revised the guidance once again, second time in a row as far as sales forecast is concerned. Coming up next, more corporate earnings. Bata post.